Well, the mainstream media continues to warn that the U.S. is now responsible for slower global economic growth. Of course, these warnings they say, come because of President Trump and the administration and what they're doing on immigration, what they're doing with respect to these trade tariffs and trade wars. They're saying it's taking us down a dark path, but the fact of the matter is that's not true. In fact, just moments ago, a new Gallup poll was released, and well, the finding is that 38% of Americans are satisfied with the way things are. That's the highest number since 2005. So what's really going on and where are we really going? Joining us now, Carol Roth, former investment banker, and Mattie Duppler, Independent Women's Forum visiting fellow, also National Taxpayer Union senior fellow. Carol, let me start with you here because, the New York Times and the Des Moines, Register and these sort of papers, which, by the way, all endorse Hillary Clinton, never had anything nice to say about President Trump. Even when there's something legit about the idea that tariffs increase prices, that tariffs are a tax. And today we saw the National Home Builder Association say that the number came in a little less than expected because the lumber tariffs have added $9,000 to the average price of a home. They don't give the complete picture. The economy and the stock market still doing very well.
The economy and the stock market are doing well, but I do think that this is a bigger issue than many people realize, Charles, and it's not for the reasons being stated. It's not necessarily the direct impact of the tariffs and how they're going to impact consumer prices. The bigger issue is the impact on sentiment. I had an opportunity to interview a major CEO that was part of that business roundtable a couple of weeks ago, and I said, what is the number one issue on CEOs' minds? He said taxes and tariffs. It wasn't jobs, it wasn't health care. If this causes business leaders to pause investment and not make those capital investments, that could show up a quarter or two down the road and have a visible impact on growth.
Mattie, I think one of the reasons, though, is the number one issue on a lot of business leaders' minds is because regulations have been put to rest. Lower taxes have been put to rest. Strong economic growth has been put to rest. So, they're paid to worry, and this is the only thing that they are concerned about. So that's legit. I get that part. But will it derail our economy, at least initially? Do you see it derailing our economy right now, at this very moment?
Yeah, I think after the last 10 years, the one thing that's remained consistent is that the establishment press has had a different perspective on the economy than was actually happening. Under Obama, the establishment press continued to tell Americans that things are getting better, and Americans didn't believe them because their wages hadn't increased, their circumstances hadn't improved. Now that Americans are feeling that, they know in their heart of hearts the economy is much stronger than it has been. Now, taxes are certainly the number one reason that we're starting to see a lot of this economic activity that has been beleaguered for the last couple of years. But that deregulatory agenda that you mentioned, that is huge in also getting the government out of the way and unleashing private enterprise. Now, you mentioned before uncertainty in the economy. That remains a sticking point. We know that the driver of growth in this economy will be investment here in the United States. And unleashing all of the prosperity in the tax code was a huge component of that in December. Now we need to see moving in the next couple of quarters for businesses to continue to make that investment. The one thing that would stop them from doing that is uncertainty that could come in the form of trade policy that makes businesses uneasy about investing.
We've got about, July 3rd, Carol, before the first tranche of Chinese tariffs go into effect. Can you handicap it, or is it just an unknown? Do you think we'll actually get there? I mean, I look at it still as a negotiating process. China's already made some overtures to us. I think if they sweeten that to maybe $100 billion or, get some IP protections, maybe we could get this resolved.
I do think that this is certainly more art of the deal, and I certainly would rather see us approach it from the idea of giving our companies here in the U.S. incentives versus putting additional tariffs on. It's just a different philosophy. So I do think we'll get there, but the concern is how long do businesses hold back all of that cash that they're getting from the tax cuts, from repatriation? Are they going to wait another quarter or another 2 quarters to see how this plays out before they deploy it? I really hope that they don't, and that's the big concern in the handicapping here.
Ladies, you're two of my favorite. You're too brilliant when it comes to this stuff, so I appreciate you both very much.